Welcome back. You're watching Buy or Sell. It's now time for us to focus on your mutual fund and insurance queries. In the meantime, the market's down nearly 0.5%, so that's not looking very exciting this afternoon. We've got with us Jayant Pai, VP and CFP of Parag Parikh Financial Advisory Services, joining us from Mumbai, and Shashikant, CEO of ApnaPaisa.com, joining us from Mumbai as well. First up, we have with us Pushkar, I believe, who calls in. Pushkar calls in from Hyderabad, and he's 38 years of age. Hi Pushkar, how can we help you?
Yeah, hi. I just wanted to clarify a few things about my mutual fund portfolio. I have given my detail. I have my SIPs in Franklin Templeton Growth. I have in Prima Plus of Franklin Templeton, HDFC Prudence, HDFC Top 200, HDFC Tax Saver, Reliance Growth and Reliance Vision. I contribute about 22,000 towards all these SIPs per month. Now I am in here for the long term, I mean 10 years above. So I just wanted to know whether my portfolio is all right, or do I need to add some portfolio, add some more funds or debt, focus towards some debt funds also, or is this good enough?
Right, Pushkar. Harsh, I mean, I know the investors probably made a good sort of variety of funds where he's put his money in, but I'm assuming he's actually handling this himself. He oversees what he's got. Too many to handle, wouldn't you agree with me? I mean, some sort of consolidation required. The sort of investment he's making monthly is fairly good, I think, but then again, how does one actually decide whether or not that's too much, is really too much?
Yeah, well, so I think it will also depend on how much he invests every month, but I think Pushkar raised a very valid concern right at the end. He spoke about should he be looking at certain fixed income funds as well. Now clearly I think asset allocation, that means how much money towards debt and how much money towards equity, is something that you do before you decide on which funds. So clearly if he's reasonably young at 38 and he has a fairly long term mindset. He said more than 10 years. So clearly if at all he desires a fixed income allocation, then he should look at equity oriented balanced funds. I mean things like HDFC Prudence, which is already there in his portfolio. But essentially too many funds, I think he can probably consolidate in 4. One is HDFC Prudence, HDFC Top 200, the Franklin India Blue Chip, as well as the HDFC Tax Saver, at least for this year, and possibly he can stop the SIPs on the others and shift them to this. Since he desires probably to increase his fixed income exposure, possibly he can shift it to HDFC Prudence.
Right, that's Harshunta's advice coming on that. And then I believe you're quite impressed by his selection of funds, right? But the investors talked about, I don't know, investing a little bit more in the debt-focused funds. Would you agree, should he be looking to increase his exposure, given that he's already got about 10-12 funds on his portfolio?
Yeah, that's true. But you know, debt exposure can come in a variety of ways. For instance, if he is already employed, he may have his EPF allocation, plus he may have some fixed deposits. So you know, you have to look at that angle also. So after that, after those other debt instruments, if he is still facing a shortfall, or if he feels that his asset allocation is not balanced, then he could opt for some good debt funds, maybe some good short-term income funds such as Templeton India short-term, or you know, Kotak floater. Some of these are there, but look at it in a holistic way. So your other debt asset allocations should also be looked at. Otherwise, yes, his fund selection is good, and he is not overweight on some of these fancy funds, you know, the sectoral and thematic funds. Only thing, if he's, I don't think he should look at any more funds in future, because he has a good enough list already. Any future investment, because as his income grows, I'm sure he would like to invest more in SIPs. So he could invest more in this same selection rather than choose new ones.
Okay, let's bring in our next caller. Janta Chaudhary is joining us now from Durgapur in Kolkata. Mr. Chaudhary, hi sir. Afternoon. Ask your question. Mr. Chaudhary, if you can hear me, go ahead sir. Ask your question.
Hello. I am Jayant Chaudhary, talking from Durgapur.
Yes,
okay,
sir.
I have purchased 90 as per 19 rupees 95. It is taxable mutual fund.
Right.
But it is now I want to systematic investment this plan. But I want to know from you the future of this plan. What will be the target in the near term?
Well, you know, mutual funds are not like stocks, so you cannot predict targets, at least from a long-term or short-term point of view. These are investment vehicles which have to be held on for the long term. So this is one doubt if you have. I just want to clear it, that please do not look at these as short-term trading opportunities. You'll be disappointed. Jen, what should the investor do? He has taken an exposure. I think he's not really well informed as to how should he pace about his investment. Maybe somebody pushed it to him. Maybe somebody just asked him to buy it. How would you rate, of course, his investment, and also does he require it to switch over to some other good mutual fund?
I mean, he may be a victim of the March effect, you know, where purely tax saving is the reason. But luckily, he has chosen a decent fund, you know, and if he is of a conservative bent of mind, I think this fund is good enough for him, because there are some technical things like beta and all that which we have looked at, and this fund scores well on all those fronts. So and of course, if it is within the lock-in, he cannot do anything about it. So only once the lock-in is over of 3 years, then he should review it as to whether it's good or not. The second is that if he wants to add some other fund, I mean, if this is the only fund, I think he has to, you know, expand his selection, because this is more of a mid-cap oriented fund, mid-cap ELSS. So he could add a good large-cap fund, say a DSP Top 100 or a Franklin Blue Chip. So that will give some balance to the portfolio. And also I believe he has invested in LIC Market Plus. See, actually this is more of a deferred pension plan. I don't recommend such plans because they are very complex. You know, it's very easy for a so-called distributor or seller to just paint a fancy picture, but there are a slew of charges. They're very opaque. And also the thing is, once you're into this, you know, exit is very difficult. I mean, the impact cost is very high. So if he is already into it, I suggest he stay put. He could, you know, stop paying further premium if possible. And but at least for the whatever he has already invested, I suggest he stay put.
Okay, all right. So you can hold on to Reliance taxable, but you might want to look at a large cap fund as well. Harsh, what's your opinion? Just one mutual fund isn't enough, and of course the investor had some doubts. But what would you say when it comes to his portfolio? Lot needs to be done.
Yeah, well, clearly there isn't a portfolio in the sense of a portfolio. Clearly both the investments are from a tax saving perspective, and sometimes when you just invest, as Jayant said, the March effect can be pretty dangerous for your investment returns. So even if so tax of course is a very important consideration when investing, but that cannot be the only consideration, which I think is the issue that Jayanta has. If he wants to continue investing in tax saving funds, I think another good option probably would be the Fidelity Tax Advantage plan, and obviously he cannot switch from Reliance if the 3-year lock-in period is still not over, and if that is over, he should shift to a large cap or a diversified fund like HDFC Top 200 or HDFC Equity, etc. LIC Market Plus, again, like most ULIP plans, it's not clear when he has taken it, but most of the costs are upfront. So going forward, the costs are reasonable. But I think the interesting thing about particularly this ULIP plan is that the returns have been extremely mediocre. I mean, we've had about 12% annualized returns, and if you look at any reasonably performing diversified equity fund, a 3-year point-to-point return would not have been less than 30% for the last 3 years. So I think clearly the returns have not been good. Subject to the tax implications being studied, he should consider switching to some other fund.
Well, that's the advice coming in, Janta. Next up, we have an email from Shikha Agarwal, and I'm just going to quickly run through what she owns on her portfolio. She's got HDFC Top 200, HDFC Equity, DSP BlackRock Top 100 Equity, DSP BlackRock Equity, Reliance Growth, Reliance Banking Fund, Reliance Pharma Fund, Reliance Regular Savings Equity, and UTI Dividend Yield. Jayant, what is it that you're making of Shikha's portfolio? Is it looking any good to you? Any sort of changes that you're recommending her, or you seem pretty impressed with all of them?
Fund selection is good, but you know, many people are making this, it's not a mistake as such, but it's a duplication, because both the HDFC funds are very similar in nature, the fund manager is the same. So you could consolidate that, you know, you could either stop your SIPs in one of these and double your SIP in the other one. You could shift the money there. And also one more thing is that these banking funds, they have been very popular recently, but I feel that it's a mere duplication again, because you know, most of the diversified equity funds have financials as their largest sectoral holding, since they are around 20% in the Nifty. So most of these funds anyway have it. Right. So I think it's an unnecessary duplication. So again, she could consider switching from that and maybe increasing, using that same those proceeds to add to the other funds that she already has.
Okay. Shikha, that's the advice coming in. To avoid some sort of duplication, you want to consolidate that HDFC fund that you're invested in, and of course increase your... Mr. Unta, what is your call on Shikha's portfolio? Do you like it? And if yes, that's fantastic. If not, what are the kind of changes you're recommending her on?
Yeah, I think broadly the portfolio is pretty good. I mean, it's a mix of primarily large cap. She has a couple of mid caps and two sectoral funds, which is a little unusual. But fortunately for her, both the sectors have done quite well. Both Reliance Banking and Reliance Pharma has done well. I would suggest that she should do some amount of consolidation. Just way too many funds, and I think the consolidation can be around HDFC Top 200, HDFC Equity, Reliance Regular Saving Fund, and the UTI Dividend Yield Fund. I mean, primarily all of them are very large cap, can continue. It has inherent risks that are larger than the overall risks in equity. As long as you remember that, I think that's okay. If she wants an exposure in mid cap and small cap, possibly look at IDFC, Premier Equity, or ICICI Prudential Discovery.
Okay, gentlemen, stay with us. We'll take a quick break, come back, discuss more mutual fund and insurance queries with our experts, but right after this quick break. Welcome back. You're watching Buy or Sell, the mutual fund special. Shashikant is now with us from Hyderabad. Shashikant, hi. Good afternoon. Ask your question. Shashikant, if you can hear me, go ahead, ask your question.
Yes, so for the last 3 years, I've been investing 34,000 per month, and just now I've increased the SIP allocation to 50,000 per month as per the following details I sent on email. So can you please suggest if this is the right allocation at this stage, and if I continue the same pattern of investment for the next 20 years, how much can I expect in terms of returns? And since infra is down and out, would you recommend getting into infra at this stage, and also any suggestions on gold ETF, please?
Well, first, a question from my side. Why do you want to get into the infra space? Secondly, any particular reason for acquiring thematic funds like Reliance Media and Entertainment Fund, even Reliance Pharma Fund? Any particular motive behind buying sector or thematic funds?
Actually, it was purely out of ignorance. I was at an early stage. I was told to invest in SIP. I just picked up various sectors, but then I got some inputs to consolidate, and now, in fact, I've consolidated and put in more into blue chip and large caps. So that is why I just wanted suggestions if I have to discontinue any of these. Because I'm seeing decent returns of 10%, but infra has knocked me down and I removed some of them from my portfolio.
Right.
But when it is down, I think, do you suggest getting in at this stage in infra?
Okay, not only for infra, but for any thematic or sector specific fund, unless you have the capability to track the sector, I wouldn't suggest getting into it. But Jayant, if you exclude these two funds, the media fund and the pharma fund, rest of his portfolio looks pretty okay.
Yeah, and that's an encouraging trend, because many of the people who are asking queries today, they're having a very decent selection. So I think your program is very good. I mean, people are, and only thing is Birla Sun Life Equity. I suggest he could weed that out. and also this Sundaram Select Mid Cap and SBI Mid Cap. They have, I mean, we have given them enough opportunity to perform, but they still are not doing too well for 3 years or so. So all these could be weeded out. So once he stops the SIPs in these three, around 8,000 rupees will be freed up. I personally like infra at this point because there is too much of negativity all around. But these infra funds which are there, I don't suggest he go into any of those because most of them are proxies for the banking sector. Because simply, I mean, they have expanded their mandate to include banking. So what I would suggest is he could choose the Infra Bs, which is an ETF, a benchmark ETF solely devoted to infra without any financial sector exposure. He could begin, there's no SIP concept in an ETF, but he could invest 4,000 per month in that. And yeah, a little bit of gold could be okay because he's not going overboard on it. So the balance 4,000 could be invested in say a benchmark gold Bs. So 4,000 in infra and 4,000 in this, and yeah, no doubt infra is not in favor now, but if you do it through SIPs, it will even out some of the volatility.
Harsh, my question to you is not related to the thematic funds. Jayant more or less already answered, but for investors who don't generally track the market so closely, does it make sense to be in a mid-cap fund, or do you think flexi caps make more sense, which again gives the fund manager the flexibility to shift between the large and the mid-cap or even small caps whenever the markets turn the way they are? And of course, if gold is to be in his portfolio, in which form should he actually buy it?
So let me answer the second one first. I think clearly on gold, especially for a regular salaried person, a typical SIP into a regular gold fund, there are currently only two, Kotak and Reliance, which in turn invest in their relevant ETFs. Although there is a double charge, but then you save on the demat charges and the brokerage, more or less it works out the same. I think at overall 10% allocation to gold out of your overall portfolio, I think is something that Jayant should definitely look at. The client should definitely look at. The other one as to do you do flexi cap versus mid cap? I think on the long run there is absolutely no issue with investing in funds that specialize in mid cap as long as you have overall exposure in large cap. So a small portion exclusively in mid cap may not be a bad idea. Again, I think mid caps is something that's going to go through a bit of a roller coaster. So I think you need to be a patient investor. Some of the funds that he has today, I don't think have done too well. Possibly he can switch it to, as I mentioned, IDFC Premier Equity or ICICI Pru Discovery. One interesting thing is, I assume he has some fixed income exposure somewhere, because all these are equity exposures. There should be some fixed income exposure which probably he has in terms of a provident fund or public provident fund or employee provident fund at least, because some amount of fixed income exposure is also good.
All right, we'll take another break. We'll come back, discuss more aspects, more mutual funds and more insurance queries. Beyond standby on the news update.
Ashu, of all the many stories that we're tracking today, TCS definitely is a top headline because that stock today is up more than 3%. At this point in time, India's largest software services exporter, TCS, has posted stronger than expected Q1 results. The company has posted profits of 2,380 crore rupees and a 6.3% jump in revenues. It's also reported a volume growth of 7.5% this quarter and forex gains of 80 crore rupees. In international news, the FBI has opened an investigation into allegations that Murdoch's journalists have hacked into the phones of 9/11 victims, while in the UK, Rupert Murdoch and his son James have agreed to appear before lawmakers investigating phone hacking and police bribery charges. These two developments and the arrest of another former editor of the scandal-sunk UK tabloid News of the World has deepened the crisis for Murdoch's News Corp.
I think it would be a calamitous outcome. It would create a very severe financial shock that would have effects not only in the U.S. economy but on the global economy.
U.S. Federal Reserve Chairman Ben Bernanke, while crushing speculation about another round of monetary easing, he warns legislators that failing to raise the debt limit in time to avoid default could only end up increasing the federal deficit. He describes that potential outcome as a self-inflicted wound. The White House has said that the limit must be raised by August 2nd or the government will not be able to pay its bills. Let's take a short break right now. On the other side, we'll once again take up more of your stock queries and mutual fund related queries on Buy or Sell.
Welcome back. You're watching Buy or Sell and we're focusing on your mutual fund and insurance related queries. We have with us Prashant Nair. He's a software engineer calling in from Bangalore. Hi Prashant, what's your query?
Hi, I have some SIP-based mutual funds which are HDFC Top 200, DSP BlackRock Top 100, DSP World Gold Fund, ICICI Dynamics, and HDFC Mid-Cap Opportunities. I just want to ask two things. One is it this diversification is enough, or from a long-term perspective, do I need to add in anything else? For all other things.
Right. So Janta, you've looked at Prashant's portfolio. He's got a fairly diversified mix of funds that he invests in. He does also indicate, or rather ask, if the diversification is enough. Should he be adding any more to his portfolio? And secondly, he also says that he's looking at some investment from a retirement perspective. I'm assuming then that would be more safer investments as opposed to equity related funds, right?
How old is Prashant? How old are you? Okay.
Prashant, I don't know if you can hear us, but can you tell us how old you are?
32.
Okay. So I think retirement is quite some while away. So obviously I think whatever asset allocation he does, I think equity would have a major part of that because it's at least a good 25 plus years away. I think he has diversification is decent, although the gold fund that he has is essentially actually a feeder fund that feeds into a worldwide gold fund. Possibly I think it might be better if 10% of whatever he is saving, he would put in a regular gold fund in India which invests in physical gold, which could be, as we said, typically if he likes SIP, basically could be the Kotak Gold Fund or the Reliance Gold Fund. The large caps are pretty good that he has. Possibly in terms of the small and mid cap, the funds that he has haven't really done that well, and I think he could select IDFC Premier Equity or ICICI Pru Discovery to the extent that he wants small or mid cap exposure. I also think Prashant, that you had some questions on your insurance exposure. What was the question that you had?
Well, that's the advice coming in from Mr. Jayant. So what do you make of Prashant's portfolio?
Yeah, it's a nice compact one. It's not spread all over the place. Only thing, he has this HDFC Sensex fund, which is an underperformer for a long time. So I suggest that he move out of that and move to one of the other large cap funds that he has. I believe he already has an investment in DSP Top 100. So that will be a good enough replication. Although it's not an index fund, there are enough large caps in that which could replicate this. And also his mid cap funds are okay, dynamic, and he has mentioned HDFC small and mid cap. There's no such fund, but I'm presuming he owns HDFC mid cap, which is one of the better performers. As regards DSP World Gold, actually this is more of a leverage play on gold, because there are two angles to this. Because this is a feeder fund which buys into gold mining companies, the equity shares of mining companies. So I suggest that he move out of this and invest in a plain vanilla gold ETF, such as a benchmark gold bees. So that's all. Otherwise there are not too many changes, and since he's only 32, as Mr. Janta mentioned, I think he should be overweight on equity at this point.
Okay. Let's move on and talk about our next query. We have a email from Anuj who's writing to us from New Delhi. Now he holds a pretty vast portfolio. Franklin India Blue Chip, he holds HDFC Top 200, HDFC Equity Fund, HDFC Prudence, IDFC Premier Equity, Sundaram Select Mid Cap and Reliance Regular Savings Funds. This, he also has a couple of investments in LIC funds, LIC plans I believe, Jeevan Anand, Komal Jeevan, Jeevan Saral, Jeevan Tarang, and he's taken coverage of close to about 15 lakhs in each of them. So that's how his portfolio is looking like. Mr. Rungta, let me start with you first. Again, having significant high exposure to all the top quartile funds. For instance, you have HDFC Top 200, Franklin India Blue Chip. So more or less the investments of these funds I think would be in the same company. So there is no point in holding two funds of the same kind. However, that said and done, what's your suggestion to him? Mid-cap funds, are they looking good? For instance, Reliance Regular Savings Fund, and of course not to forget the investment, the significant investments he's making in the LIC plans.
So I think the fund selection is more or less okay, except for this Sundaram Select mid cap. And I think the other question that you raised about funds having similar investment patterns and therefore it is unnecessary duplication. I think people just feel comfortable even if they invest in similar companies to do it through two funds. So as long as you select the top quartile funds, I think that gives them mental diversification, if not real diversification. So I think that's quite okay. The interesting thing here is the life insurance investments that he has made. All of them are clearly endowment policies, and I mean he's paying a fair amount of money, almost I think 20,000 rupees a month for all these endowment plans. Now we're not clear when did he start them, but if we were to start them today, his return on them would be 5 to 6% max, and plus the insurance coverage that he gets would be probably be inadequate from the amount of investment he is making. Clearly the income levels are pretty high. So I think one of the first things that he should definitely do is to buy adequate insurance, which should typically be a term plan that he goes and buys online, which is the cheapest form of insurance, and it's now pretty cheap available online. As far as these existing investments in the insurance schemes are concerned, I think it will require a little more detail to find out what their current surrender values are and what are the likely estimated maturity values. But I suspect if he has been in these schemes for the last 3-4 years, he'll probably just have to continue, because the loss that he will incur on surrendering would be high. If he continues, he'll probably, assuming surrender value as the initial investment, he'll probably get a 7.5% return. Some assumptions in that, so he should consult a professional on whether to continue with these policies or not. But don't forget the adequate term plan. I think that's most important for him.
Okay, just before I go to Jayant, I just want to make a brief mention. We have reports coming in that the DB Realty project, apparently the Pune project which they had launched and which was in a bit of a mess, has actually gotten a letter of annulment. The project has been scrapped. I think the news came out first in the month of May that the project is facing headwinds, and of course if you recall, this project was a 400 crore slum rehabilitation project in the Pimpri Chinchwad township, which they were planning. It was a slum rehabilitation project. Apparently there was a talk that this project would be getting dropped. 50 crore investment which they had made might get reimbursed to them, but this issue has been in contention for the last couple of months now. Finally the company getting letter of annulment, they might move on to a court to try and tackle this issue. However, said that, Jayant, let's get your perspective on how should the investor realign his portfolio.
Yeah, his fund selection is okay. Only thing, the common pattern nowadays is to buy both these HDFC funds simply because they're doing well. So he could move out of one of them and consolidate in the other one. So either HDFC Top 200 or equity, he can just give up one of them. Sundaram Select Mid Cap is a perennial underperformer, and he also has IDFC Premier Equity. So again he could consolidate there. Except that IDFC Premier Equity, the one-time window is closed now. So once he redeems Sundaram Select Mid Cap, he could either commence an SIP from the proceeds into IDFC or wait till the window opens, which should open once every 6 months. It opens. Other funds are okay, and he's gone overboard on insurance. I mean, if he's clear about why he's done so, then I still feel it's okay, but mostly people are not very clear. if he has done it from the life cover point of view, I don't think these will give him enough life cover. I don't know his full case, but based on whatever I see here, and if he's doing it to meet some financial goals, as Mr. Rungta said, I mean 5 to 6% per annum, it's not even positive returns after inflation. So on both fronts, these policies don't seem to be good enough. So he could either withdraw, I mean surrender them if the impact cost is not high. I mean if he's most likely he will be suffering some loss if he'll be doing it, or he could just convert it to fully paid up. So future premiums need not be paid. The money which is freed up there, he could use it to bolster the SIPs in his existing mutual funds. So that's I think that's the least cost way out.
Well, Anju, that's the advice coming in from Jayant and Harsh, both on your portfolio. Well, we'll step in a quick break. We'll come back, go back to taking up all your stock queries. We'll also be joined with the management of PSL, who will talk to us about the recent order win that they've just got through. Welcome back. You're watching Buy or Sell. We now have with us the management of PSL Limited, Ashok Punj, Managing Director of PSL Limited, joining us on a phone line. That stock is up about 4% on reports that they're likely to bag a 500 crore rupee order. Thanks very much, Ashok, for joining us this afternoon on NDTV Profit. Ashok, take us through these details of this order. Your stock has obviously reacted very sharply. It's up about 4% and there are reports that you've bagged an order worth 500 crores.
In fact, we did announce last week an order from NTPC to the extent of 130 odd crores, but at the moment we don't have any announcement of 500 crore order. There are several bids outstanding in the market, but we have not from any customers to that effect. I think some of the high may have to do with a general improvement in sentiment in the pipe industry, because the gas grid implementation is picking up speed, and we see something that we haven't seen in the last year or two in the industry is an overhang of potential and implementation of projects which have been delayed or on hold for some time now. We see some of those bottlenecks being removed, and the industry is, I think, generally bullish on growth in the next year or two, and I think that's reflected in some of the market movement today.
Right, Mr. Punj, I know you won't comment, but still I'm going to try and pin you down. Can you give us a sense what's the total order book like, and how many contracts have you currently bid for, which are potential orders that you might actually get? Can you give us a sense on how's that going to pan out?
Yeah, Ashu, the order book at present is at about 2,600 odd crores, and in terms of orders outstanding, this can be in very large numbers, as much as 2,000 crores or 2,500 crores. Should not be taken as an indication of order booking at that level, because some obviously not come to us, some of those bids, and the ones that do come to us may come for a longer period of time. So while, as you rightly said, we can't speculate on orders yet to be received, but I think there is a trend in the industry, particularly in the implementation of gas-related pipeline projects. There is a increase in the momentum, and I think that is reflective in the market. Looking at scripts that are dealing with that sector.
Right, and sir, that was exactly going to be my next question. I was reading the press release that you had sent on 14th of June, which was a 753 crore order you bagged from GAIL. I'm presuming the next order might also come in from GAIL. Can I assume that, or perhaps it's a little far-fetched?
That would not be correct. There is no imminent offer from GAIL likely. There are several bids outstanding to other gas players, including GSPL, and GSPL has a large backlog of pipeline projects relating to the gas grid, which they are to implement. So, if anything, if there's movement in the coming months, GSPL will be the source for additional work in the industry.
Right,
Not
Mr.
only to PSL, but to all the players within the industry.
Right, Mr. Punj, we'll leave it at that. Thank you so much for your time. Great to have you with us. Well, the market seems to be sensing something here, but Mr. Punj not really commenting on that. However, let's move on. Let's bring in our next caller. We have with us Deepak, who's joining us from Kerala. Deepak, hi. Good afternoon. Ask your question.
Good afternoon. I am holding mutual fund holding units in Reliance Vision, Reliance Growth and Reliance Equity Opportunity. Should I continue to hold or switch over to some other fund?
Deepak, you seem to be in love with Reliance. Any particular reason?
And doing well in the initial in the year 2007-8.
Right.
And I just continue to hold.
Fair enough.
But of late it has been underperforming.
Jayant, he wants to diversify. HDFC is his pick. He should definitely do it.
Yeah, I mean, in that sense, yes. But within these three, it is Reliance Vision which is the last zebra in the pack. It has been underperformer for a long time. There were signs of improvement in this fund 2 years back, but it has fallen back again. So I would suggest he move out of this. HDFC Top 200 may not be the best replacement because it's not really in the same category as Reliance Vision. So if he redeems this, he could add to his holding in equity opportunity. So he could do that, and because Top 200 is not really in the same category. So yeah, so reduce your funds from 3 to 2 and maintain your HDFC Top 200.
Okay. And Harsh, your suggestion for Deepak?
Yeah, so I think he could go by what Jayant has said, or if he wants to shift to HDFC Top 200, that's not a bad idea either. I think he can look at that also. I think among the three funds he has the better performing one only has been the Reliance Equity Opportunity Fund. There was a question that he had asked regarding silver as well. Was that a question there on silver?
No, apparently he didn't have a question on silver. Okay, I think he had a question on if there is any fund, an ETF that is available. Harsh, anything available?
No, there's no silver fund available. I think it's fallen between the regulatory issues, and because of that no silver fund is available. Of course, if he wants to invest in silver, he should think long and hard about whether he should invest in silver. But if he does want to invest in silver, should look at the e-silver units, the e-silver that he can buy on the National Spot Exchange. He'll have to go open a broking account with a NSCL broker and a separate demat account for that. But that's a good way to invest in silver if at all he wants to do it.
Okay, okay. I'm going to leave it at that. Gentlemen, thank you so much for your time. It's always a pleasure having you with us on our show. Have a great week and we'll see you next week. With that, we come to an end of this edition of BioCell, but stay with us. Lots more coming up next.